Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 7th of February 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers as the Global Head of Research and Education. So we want to have a look at the markets after things calmed down a little after the flash crash on Monday here in the Dow Jones. So the DAX, in fact, but not just the DAX, but also the Dow Jones, saw some good buying, some good bid. Here and or some good bids here, and in fact from the lows, the Dow Jones yesterday made 1,700 points back, and I'm not really sure, to be honest, whether this is it yet on the upside. By the way, now on the website, what you can see here is a JFD research. So let me just guide you through this. So this is the article itself, but then let's first have a look here at the website from jfdbrokers.com. So here you can change the language to English then. And what you can see is here, research and education. And if you click on JFD research, you're forwarded to our research portal. And there you have in several languages research available. And I uploaded a report here in the morning, the crash report for February 2018, and I think it's very interesting to read through this because it clarifies lots of things. What happened? How could it happen? What did we see in terms of the VIX, for example? There's huge short covering right now taking place, which is probably coming to an end. So the thing is that what we've seen here and this huge rise in the VIX, I mean, what we see here is the closing price. So we don't see the intraday action in it. And there were times when the VIX spiked above 50 here. So yesterday, for example, it made it above 40 here significantly. But right now it's on its way back. So I've prepared this here already. You can see the VIX and it's down to 30 already. I'm not saying we're yet done, and there's still some potential that there's another short covering wave coming, even though this push already somehow indicates that most of the covering is probably done. And this is something which is interesting, because if the VIX now starts to drop, I'm not saying we're dropping towards 10 again, so probably we will rather sooner or later stabilize between 15 to 20 here over the next weeks. But all in all, I'd say that with such a potential pullback here down to these levels, there is a good chance that probably the recovery in the Dow Jones can take on further momentum, and meaning that the Dow Jones is probably about to see some further recovery in the upcoming days. Then, so that's my current tendency. So I'm not aggressively short equities anymore right now, but I'm more like that there's some potential for recovery here. Nevertheless, again, back to this report. So there you can also find some interesting stats on the NYSE margin debt, for example, and the combination why this is a toxic cocktail, and how HFTs, high frequency trading algorithms, come into play here, and what also this could mean for the future. So feel free to reach out to JFD Research here and check out the website, and then just look for this crash report here for February. I think it's worth reading through all this, because, and this is the interesting thing, it's also something which is interesting for especially intraday traders and active traders, because the disappearance in liquidity in the market can be seen in all markets. And if you, for example, have a look here at the DAX, what you can definitely see is that the market is really jumping. It's really jumping. It's very aggressive moves, especially yesterday here. So just have a look at this. I mean, that was when we opened in Wall Street. That was at 2:30 p.m. GMT. We're trading at 13,300 points and pushed higher within half an hour of over 200 points here, and it was a real aggressive move here, which took place here, and this is showing that liquidity is nearly disappearing. And by the way, I can also show you something I retweeted yesterday, and let me just show this to you here. That was an interesting chart from Eric Hunsader, Nanixlix here. You can see this here, that market walking. It was, I mean, it sounds a little brutal, but in fact, have a look here. Liquidity in the most liquid equity futures contract in the world, so we are talking about the S&P 500, has evaporated here. The thing is that liquidity nearly has flatlined. That was shortly before US equity markets opened yesterday. And those jumps in the equity prices, they perfectly illustrate how difficult and probably also how careful you as a trader should be when trading in the lower time frames here, and adapt accordingly in your risk and money management. So what I'm talking about is the following. Just imagine you're working with a stop and you're not getting the price as you wished for, meaning you're probably getting negative slippage of something like 5 points. So I think we are talking about the same broker, so we are trading at JFD. So in fact, negative slippage at JFD brokers is not such a big topic, because the quality of the order execution and the depth of the liquidity pool JFD brokers is using, and the number of liquidity providers, the quality of them, all of this adds enormously to still a very, very good order execution, even though the market environment itself is currently probably resulting in a less good execution of your order. So if you're talking about, let's say 5 points here, it's negative slippage, and you're doing 10 trades, this sums up to something like 50 points. You have to make up those 5 points plus commission to at least break even, and then take your performance on top of that. And this is something you have to definitely remember when looking at those graphics. Some of you might say, okay, well, nice report, but what can I do with this? What can I do with all this theoretical input now around liquidity? Exactly that. So if liquidity evaporates here, that's something which is very important for especially those traders which are actively trading the markets. And if there is only a small negative slippage, which is not unusual for such a illiquid market environment which we currently found ourselves in, well, the thing is that this could sum up here and add negatively to your overall performance, and that's something you definitely should keep in mind. Now let's have a look at the markets and things, how they develop here in the DAX. I currently watch really carefully this region. We are trading around the 50 exponentially moving average 50 here. We know that it's a good trend indicator, and we are slightly trading below the spot open. This is the turquoise line you can see here, and we were already trading in this region around 1 hour ago when I held the German version of the morning meeting. And I told people, well, the interesting thing is that with the potential of the volatility going down again, and with, I think, further potential here in the Dow Jones, for example, to probably forthright this huge reversal we've seen yesterday. So we trade as low as something like 23,100 points, yeah, and pushed higher and closed at 24,795. This is nearly 1,700 points higher, okay, if you look at only this move here. And I think it's not unlikely that we're probably making back most of those losses in the upcoming days into the weekly close. So we started the trading day on Monday here. That was the day of the flash crash, and we started at 25,500 points around, and I could really imagine the market to probably make this back, especially if volatility comes down again. I'm not talking about the volatility crash and market participants again aggressively shorting volatility here, even though it's something which could coincide with a further rising Dow Jones and recovering Dow Jones, even though it doesn't necessarily mean that we make it up to new all-time highs, but that we at least make back some of those losses. And if this really happens, then I think there's a good chance that the DAX can follow the Dow Jones here and make it not only back above 12,500 points, but probably is about to push towards these highs here, the intraday highs around 12,550 points. And interesting enough here, if we make it above this level, I think there's not just only room up to 12,650 points, the region around the close at 9 p.m. GMT yesterday of the FDAX, the future DAX here, but also that we probably make it above that level. And now the region comes into play around 12,800 points here. So this is this red zone. on the upside. It's a very strong resistance zone, and against this I'd probably favor short engagements again, because I could imagine the market, if it pushes to this region, to find strong resistance here and at least see a pullback here. And in the current market environment, low liquidity and high volatility, I think there's a good chance that probably such a pullback could then be something like 200 points or so. But, and this is the thing, intraday, the bulls are probably having a good chance. What I really like to see here as an intraday bull, if I was one, okay, I'm not saying I am one, but if I was in triple, I think what it's very, very interesting to see is that after a quite weak opening here, the market stabilized around 12,420 points and wasn't capable of pushing really aggressively lower. Now making back some of these losses, intraday losses, and this is already a sign that the volatility is coming down, that the market starts to stabilize. Still, market environment is vulnerable to sharp declines again. If some selling pressure hits, that's definitely something which could cause a real collapse intraday, definitely. If we make new intraday lows for whatever reason and push below the support region here, which was built yesterday from around afternoon onwards, and we push back below 12,350 points, there's definitely some further room for 200 points and the region around the lows here from Monday, the flash crash lows. Even though, as long as we trade above the intraday lows, I favor the long side, and I could imagine the DAX to make it quite significantly back above 12,500 points and probably even higher than that. If we make it above 550, it's 650 the next target, and above that 800, 850 points on the upside. And again, if US equity markets can recover some of these losses, probably today, then I think there's definitely some further room, or there's definitely room for such a push in the DAX, even though it might seem really strong. I mean, we're talking about something like 400 points from the current levels, 300, 350 points probably, but still, this is a quite huge move, even though it's something to definitely consider. And why do I say this, and why am I that positive right now? Well, I consider this push in the VIX here, I consider this to be not really a risk aversion move, but it's more like a sentiment extreme, which was unwind here, and we saw some aggressive short covering here. It already took place from last week onwards, but it accelerated and peaked, let's say, on Monday. So there's potential that there's still some further short covering taking place, but short covering does not mean risk aversion. So it's not that the market is really fearful now and panics. I mean, sure, we see we have some tendency here towards panic and a market environment which is not really calm here, especially when looking at the developments in the VIX. Nevertheless, it's not real risk aversion, but it's more like a short covering, and this increases chances that probably the Dow Jones can keep on pushing on the upside here, intraday at least, and makes back some of these losses from Monday. And that's also something you can perfectly see in the gold price. So if there was real risk aversion, what usually you would expect is gold being aggressively higher. Instead, the gold price dropped aggressively yesterday below our important level around 1,325 USD per ounce. Difficult to say what's the reason, to be honest. So I mean, it's probably that one reason is probably that Steven Mnuchin made a statement again and talked up the dollar this time and said that he is interested in a strong dollar. I think damage is done after his comments in Davos. Whenever he says this now, that he's preferring a strong dollar, I don't know, but what we can definitely say is that the US dollar reacted, made back most of the losses here from his first comments in Davos on the 24th of January here. And with this current recovery in the US dollar taking place, gold saw some drop here on the downside. And this is something also worth mentioning, because even though it might be induced from those comments from Mnuchin yesterday, the quite sharp drop in the afternoon then in gold, let's have a look here at the 50-minute chart, and here you can see it. So it started out in the afternoon already and accelerated into the evening then. I mean, we have to say that if there was real risk aversion, you usually see gold bid up and that's not happening. And that's one other reason why I'm a little skeptical whether the current mode on the downside is probably a little overextended, and we are not just seeing a quite huge reversal yesterday, but probably some further recovery of the losses of the last days. Yeah, so that's it on the equity side and also on the precious metal side. Let's have a final look here then at the currency markets. Also interesting to see, for example, that currently the US dollar can gain some momentum. Euro USD is about to see some losses here. Interesting to see what happens in the range around 22.80, 23. That's the first target for intraday bears here. Those of us right now trading the short side in Euro USD, if you break below this level, there's further potential probably down to this trending channel line here on the downside, probably down to, let's say, 22.20 or so. But everything above 121.60, 121.70, I consider to be long Euro USD. And so I have to say, if you're a midterm bull, and you probably see Euro pushing towards and above 125 to 125.50 and breaking above that level, then targeting, eyeing longer time frame around the region around 130. That's definitely a pullback you prefer right now, because it increases the risk reward ratio for long engagements here. And the levels to watch on the downside, 22.80, 23, and again, if we push below that, probably 22.20 or so. That's definitely something worth watching. On the 4-hour chart, everything above 121.70, 121.60, 121.70 is definitely should be considered bullish. By the way, when we are talking about not just liquidity but also volatility, I have to say that probably dollar yen, and as long as we stabilize around above 107.50, probably dollar yen starts to look interesting again. Those of you who want to buy aggressively, well, not sure whether we should do it right now, but if we make it above the highs from yesterday, which can be found here around 110.50, is it yesterday? No, these are the highs from Friday already. Okay, so it's a 4-hour chart. So we found strong resistance here and triggered short against this region. So if you're short right now, what you definitely want to see is dollar yen gaining momentum and breaking below 108 here. The only problem I see is that the break did not occur yet, and with the outlook that probably volatility keeps on coming down from the spikes we've seen on Monday here and on Tuesday, I think that the Japanese yen probably will lose some of its steam here, and that we didn't break based on the trigger, finding the short trigger here in this region, that we didn't break below 108. In my opinion, it's a sign, it's a first sign that probably the dollar yen can probably take off against this level again. The moment when we definitely should consider long engagements is when we can make it above 110.80. Sorry, 110.50 here, the lows from last Friday. So yeah, that's it on the currency front, and that's it from my end. Happy trading. Watch your stops. Talk to you again in the morning meeting tomorrow, 10:30 a.m. GMT. I definitely look forward to it. Have a nice day. Take care. See you, and bye bye.